All right. Hello again, everybody. This is Mike Rixey. I am the lead options instructor for NetPicks. Wanted to jump on again today. We were live earlier, closing out an overnight pop trade, but I wanted to jump back on here and do more of an official midweek update, walking you through where we stand market-wide. Also want to walk you through some of the key markets that we're looking at here for the rest of this week. We'll talk through a couple of trades that are on our radar, trades that are setting up here yet today, trades that could potentially be triggering in it for us here this afternoon or even tomorrow. So I'll walk you through what we're looking at there, how we plan on taking those trades if they trigger in. As always, if you have any questions throughout the session today, feel free to type those in at any point, and I will get to those as they come in. If you are watching the recording, you can always post a comment here in Facebook or on YouTube, and I'll get back with you there as well. So let's talk about market big picture. I want to talk through the overnight pop trade just briefly because I did get a couple of questions after we went live a few hours ago, closing out of that trade from yesterday afternoon. I want to cover some of the questions that came in. So let me just real quick bring up that spreadsheet and show you the details of that trade. So the trade that we closed out this morning is the one at the very bottom here. This is a trade that we opened yesterday afternoon. We came in, we sold an out of the money call spread. We sold the 407, 409 call spread. All that means, I know it's a little intimidating if you're brand new to trading options, you're hearing things like credit spread and vertical spread and call spread. I mean, there's a lot of terminology being thrown around. All we're simply doing with this type of a trade is we're selling the 407 call and we're buying the 409 call at the same time. We're trading two options at the same time. The goal is for SPY to stay below 407. As long as it does, I don't care if it moves up, down, or sideways. I can make money as long as price is below 407, even if it finishes below 407 by a penny. We're okay with that. We make money from the time decay adding up and from volatility decreasing. That's the benefit here. Today is a prime example of a session that's been pretty noisy. A lot of head fakes here in both directions so far today. If you were just buying long calls and long puts on SPY, it'd be a little bit more difficult because we haven't had a lot of follow through. But because we used the right strategy yesterday afternoon, because we sold the call spread, these options have lost value pretty much all day. That's exactly what we wanted to have happen. We sold the spread yesterday for 52 cents. So that's what we opened the trade for. We closed it out for 26 cents. We bought it back cheaper here today, and that gave us a nice $26 profit per spread. Now, I talked earlier, those of you that joined us here live earlier, I talked about how, when you look at that bottom line number, it doesn't look all that impressive. But the powerful piece here is that was an 18% return on our capital in and out in less than 24 hours. We opened the trade during the last 30 minutes of the session yesterday. We closed it out here late morning today. And actually today was one of those examples where we actually had to hold longer than we normally do. So a couple of things to like about this trade. Number one, it only tied up $148 of our capital to put the trade on. So not a lot of capital required. If you've got a bigger account size, you can still put the trade on 10 times with 10 spreads, and you've got just under $1,500 of capital at risk. So very reasonable regardless of account size. And I love this trade because did we get a big move to the downside here today? Let me bring back up my broker platform. Look at the S&P. Look at the futures. They're up 50 cents. They're basically unchanged on the session. We put this trade on yesterday afternoon with the goal of SPY moving lower. That did not happen. We've just basically chopped sideways. We kind of bounced around here so far today, but that's enough. That was enough to book us a nice $26 profit per spread. If you took it with $500 of risk, which is the number that we use to track these trades with our customers, it was a $78 profit on a trade that we did not get the directional move we were looking for. So I love how forgiving these trades are. One of the questions that came in was from one of our existing members. And they asked, okay, Mike, you're closing out of these trades for a lot of partial profits. In a lot of cases, we're closing these trades out when we can keep between 50 and 75% of the max profit. Closing it out at 26 cents here today gave us 50% of the max profit. Well, their comment was, like, why not hold longer? Because on many of the trades, if we hold into the afternoon, there's more profit to be made. In many cases, that would have worked out going back to previous trades. While that is true, the problem with that is if I hold, I run the risk of letting a really nice profitable trade move to a loser. If SPY decides to rally higher this afternoon, volume's pretty light here today, markets are very mixed. That typically, if we look at past moves, that typically leads to an afternoon rally. If we get that afternoon rally, this spread could go from a 50% max profit type trade to a loss. And I don't want to take that risk. It will happen. If you're going to hold looking for the bigger winner, you have to be comfortable with the fact that you're going to have winners go to losses very quickly during that afternoon session if you get a market reversal. I also don't want to sit there and watch the trade closely all day. My schedule doesn't allow it. I'm busy with customers. I'm busy with students all day long. I can't sit there and track markets closely from opening to closing bell. So the goal of this trade was to close it out as quickly as possible. So we close it out late morning, booked the profit, and now we're just waiting for the next setup. Our next overnight pop trade would come Thursday afternoon into Friday expiration. That's one of my favorite stretches to trade because not only do we have SPY that we can go to, we can also take a look at any stock or ETF that has weekly options expiring on Friday. So we'll pick the overnight pop trade up again here tomorrow. So after the losing trade, we did have our first losing trade in 20 plus trades back towards the end of March. And we followed that up with 5 winners in a row. So we're continuing to see those numbers work in our favor and just continues to provide another source of income throughout the week. Now, is this the only type of trade that I take? It's not. It's just one piece of the puzzle for me. Now, I love to take longer term positions as well. And what I consider longer term is a trade that could potentially be held for anywhere from 3 to 30 days. Okay, so the overnight pop trades are nice because they generate some income each week. And then the longer term positions are the ones that will typically give me the bigger profit in many cases. Okay, so mixing those approaches has really done wonders for us over the years, getting that diversification that we're looking for. And hi, Kevin. Thanks for joining us. Kevin from Florida. So hopefully you are enjoying some nice sunny weather down there. I'm in Indianapolis and it's amazing. And we've had a couple of days here recently that have hit 70 degrees and it feels like 100, you know, coming off of winter. It's just amazing how a little warmth just cheers everybody up. So thanks for joining us, Kevin. If you have any questions, let me know. All right, so let's take a look. Let's go away from the overnight pop trades and let's talk about market big picture. If we take a look at the daily chart of SPY, it's very overbought. No doubt about it. We've seen another move to the upside over the past 2 weeks. We have seen a move from a down around 384 all the way up to 407.24. That's the all-time high from yesterday, new high. We've had hardly any type of selling pressure. And what little selling pressure we have had intraday, those dips continue to be bought up almost immediately. I am not saying the market can't head higher here long-term. We very well could. I mean, with all the money being thrown at this market with stimulus and what the Fed's doing to try to prop things up, we could very well see another leg higher. In the near term, to wrap up the week, going into next week, I am expecting either continued slow, choppy price action like we're seeing today, or a pullback to touch the 8-period exponential moving average. That one's sitting at 401.04. It's that pink line there on my daily chart. If I zoom in, you'll see it a little bit better. That is the level that I would love to see tested over the next few days. Right? So notice that's only a move down to 401.04. I mean, that can happen very quickly. It can happen in a matter of hours. I am not saying the market's going to crash. A lot of times when people hear me say markets are overbought, we're due for a move to the downside, they immediately think that means a crash is upcoming. That's not the case at all. What we're looking for is a move lower off of these overbought conditions, potentially test some support here down below us before another leg higher. All right. So, I mean, if we take a look at previous moves, notice how all of these pullbacks, you just go back over the previous number of months, any type of a pullback that we've had into support has led to a springboard reaction back up to new highs. Right? If we just continue to plow our way higher here, I think it's going to be more difficult to trade in that type of environment because you're just going to be left chasing all-time highs. The volume has been extremely light again today. We've got a couple hours left in the session. Only 30 million shares are traded today. And that's definitely a lower number than what we were seeing here a couple weeks ago. The volume is going to contract. So too will the average true range. The ATR indicator down at the bottom. It's the average true range that we're seeing on a daily basis. And notice how that ATR has dipped below 5 here this week. We're down currently at 4.73. The lower that number, the tighter the range will be intraday, and that makes it more difficult to stay active. Ideally, we want an active range. We want that range above 5 because that will typically mean we're seeing back and forth movement, a lot of good range to work with. As this market continues to head higher, it's going to be more difficult to maintain this level of activity. we're most likely see things slow down. We don't want that. We want to stay active. So in order for that to happen, we definitely need to see some selling pressure. So 401.07 would be the first level that I'd love to see tested here over the next couple of days. If we don't pull back, if we continue to plow our way higher, the next areas of resistance up above us, we would be looking at 407.50, 408, and 408.50. I'm getting those numbers just from the sake of them being key round numbers, right? So big 408, 409, 410. The 0.50 levels will act as support and resistance quite often as well. So 407.50, 408.50. Those are the levels that we're looking at because we're at all-time highs. We have no previous levels to look at above here. We're in uncharted territory. So we're going to shift our focus to those big round numbers here going forward. The VIX down around 17.6. It got down below 17 here today. So definitely volatility has been sucked out of this market. We're at levels now where the market's completely one directional. Everybody is loaded up bullish. No one expects the market to head lower. There's no fear. Normally, when you start to see that type of environment where everything is one-sided, the market tends to throw everybody a curveball. So that's what I am expecting here in the near term. If we take a look over at the 195-minute chart of SPY, this is the one that I actually use for my entry and exit points. We talked about this one for those of you that joined us yesterday for the overnight pop trade. This is a chart that I showed you, and we were selling that call spread because of this overbought condition, because of these yellow bars on the pulse indicator. Those yellow bars indicating price being between a 1 and a 2 standard deviation move on the upside. That does not mean price can't head higher. It certainly can. But what it means when I start to see these yellow bars, is I know that only 13.6% of all occurrences fall outside of this range on the upside. It's just not statistically probable. Odds favor a period of consolidation or a reversal in the other direction. Look at previous occurrences when we've had those yellow or green bars on the pulse. We had one back here early March. This time on the downside, we got oversold. What happened? Price action, found support. We saw a pretty significant rally higher. We saw another cluster of yellow bars on the downside back late January. What happened? Price action found support, another move to the upside. So now we've got these yellow bars on the upside. We're overbought. Now we're expecting this pattern will typically lead to either a period of consolidation, which we're already starting to see the last few days, or even a reversal lower. So how would I play this? I'm not interested in long puts here on SPY for a couple of reasons. Number one, every dip continues to be bought. If I'm going to buy a long put option, that's an aggressive position. I want to make sure price action confirms. In order for that to happen, I would like to see price action break our 8-period exponential moving average. That's that blue line up here that I'm putting my mouse over. And ideally, I would like to see our trend strength histogram down at the bottom, which is currently blue. I'd like to see that one flip below the 0 line. I'd like to see that one go red. So we're not even close to that happening yet. That's why I'm not interested in a long put. But could I sell a call spread here? I certainly could. Why would I be willing to sell a call spread instead of buying a long put? They're both bearish positions. The short call spread puts the time decay in my favor. Now every day that passes helps me instead of hurting me like it would if I bought a long put. Here's how I would structure it. Let's go back over to Thinkorswim and let's take a look at SPY. I next need to determine, we've already established that we are expecting either a neutral to bearish move going forward. I want to make sure that I select the proper expiration cycle to match up with that outlook. Okay, could I go with some of the weekly options? I could. SPY has very liquid options. I normally like to see between 20 and 40 days left to expiration. If I go out and take a look at the April 28 weekly options, those are the ones with 21 days left. Let's open those up. Let's see if there's any liquidity in here. If I take a look at the out of the money call options here on the left-hand side, you'll see that we do have some liquidity here. Nothing near what we would see on the monthly options, but you've got open interest in the out of the money options here in the hundreds or even thousands of contracts. That's typically enough for me to get filled quickly and at a decent price. So we're going to stick with it. We'll start out with the April 28 options here. I am going to go out to, let's go to the 410 calls. I am going to right click on the 410 calls. I am going to go to sell and I'm going to select a vertical. Selling a vertical spread is a neutral to bearish position when we do so with the calls. So if I pop up an order down at the bottom, you can see that I would be selling to open the 410 call and I would be buying to open the 415 call. Right now, the spread is currently trading for $1.66 mid price. If I click on confirm and send, you'll notice that I would be risking $334 to make 166. I'm risking 2 to make 1. I'm okay with that ratio because I've got 5 ways of making money on the position. I make money if the stock moves up, down, or sideways. Doesn't matter to me as long as price stays below the 410 strike that I'm selling, this 410 call that I'm selling down here. So it takes the pressure off needing that big directional move. If I bought a long put, it's like holding a ticking time bomb. That stock better move in your favor quickly. I want a more forgiving trade. This is a more forgiving trade. Okay, so up, down, or sideways doesn't matter to me as long as price stays below 410. We also make money from volatility decreasing and from time decay adding up. Every day that passes over the next 21 days, every day that passes helps me. It's going to cause the options to lose value, and that would help me on the credit spread. Okay. So this would be one neutral to bearish position. I also continue to get questions from people, stating, hey, Mike, I don't have enough capital to take the spreads with. Keep in mind, these vertical spreads actually take far less capital than just buying an outright call or put. The most I can lose on the trade, if I am dead wrong, the most I can lose on this trade is $334. It's not tying up a ton of capital. It's a fully risk-defined trade. It's a very safe trade. It's actually much safer than just buying the outright call or put. Okay. So this is one of those positions that is on my radar for the next couple of days. I'm not saying you have to rush into it and place the trade now. What I just walk you through is how we would structure the trade. But I tend to put on my credit spreads during the afternoon hours, typically in that last 60 minutes of the session. That's typically when we get another burst of volume. It also allows me to see, are there any intraday head fakes? Do I see any false moves intraday? Waiting to that last hour is definitely the best way to go if you're going to use the credit spreads. Okay, so that is SPY, the trade that's on the radar for the next couple of days. Let's take a look at another one setting up for us. Let's go over to First Solar. This is symbol FSLR, again, on the 195-minute chart. So notice here, price action over the past month or so, we have been stuck between 80 and 85. You can see we've been stuck inside of this sideways channel. When I start to see a sideways move like that, it's what we call the coiled spring pattern. We know that as price action stays that tight, it's like a spring that coils tighter and tighter. At some point, that spring is going to pop. You just don't know when it's going to happen, right? Same goes for FSLR. We don't know when the spring is going to pop. It could pop higher or lower. It could happen the next couple of days, next couple of weeks. We don't know. But we know out of this pattern, you'll get a lot of really nice moves. Look at this move to the downside back in February. It came out of a sideways period back in January, late January, early February. We were stuck in that sideways pattern. The spring popped, and we saw a nice tradable move to the downside. Here we are again, very similar pattern, sideways chop. We're looking for that spring to pop. Now, how do I tell which way it's going to pop in? No one knows, right? But what we can tell is that price has started to roll over here. We're starting to get back down towards the lower end of that channel. And our trend strength histogram has gone from blue to red. Okay, right here, actually, as of this morning, that trend strength histogram is starting to confirm a bearish outlook. Now, my two blue plus signs, those indicate my entry point. So if I click on those blue plus signs, the blue crosses there, over my data box, you will see that my entry point is at 79.78. If I can get price down to that level, I would be interested in initiating a new bearish position. Okay, so it hasn't quite triggered in yet, but we're getting close. Here's how I would take the trade. A little bit different than SPY because now on First Solar, I have price action starting to confirm. Price action hasn't confirmed on the downside on SPY yet, but it is on FSLR. We're starting to break lower, which we just took a look at. So I am open. If that entry point is hit, I am open to taking a long put, just to buy a more aggressive long put position. Any type of a long option that I'm using right now, I am using the May monthly options with 44 days left expiration. I'm going to open those up. I like to go out a little bit further in time with my long options because the time decay from the moment I put that trade on, the time decay is hurting me. If I go farther out in time, I'm able to limit that time aspect somewhat. Okay, so I'm going to go out to the May monthly cycle, and I want to get slightly in the money. I was looking at the 82.5 puts here earlier. They're currently trading for around $6.50, a little bit more expensive. Okay, tying up just over $600 per contract. I don't mind that, even though we're paying more for them up front. It's actually a more conservative trade because we're going out 44 days. So even though it's time more capital, most people will go to the weekly options because they're cheap and they think they're safer. It's actually not. Even though you're tying up more capital, it's a safer position the farther out in time that you go. All right. So I like the 82.5 puts here. However, I only like this position if we can get down to that entry point down around 79.80. So we need another 60-cent sell-off or so, 60 to 70-cent sell-off on the downside. You take a look at First Solar, 177 contracts of open interest, 3 have traded today. So it's not the most liquid product in the world. I have not had any difficulty trading First Solar. You can see the bid-ask spreads, they're decent. Right now, there is currently a 15-cent difference between the bid and ask prices. So you shouldn't have any problem getting filled on this trade. But again, only going to do so if we get down to the entry point down below 80. So this is another one that's on my radar for the next 24 hours, but I need to see price action hit that entry point first. Okay. Another one, Microsoft. The tech sector. We talked the last couple of weeks about how if this market was going to make new all-time highs, we needed the tech sector to pick up. We needed the NASDAQ to wake up and start to join the fun on the upside. And it certainly has over the past week. The NASDAQ, specifically Microsoft, has had a really impressive move higher. Okay, we're up around 250 at this point. Well, notice down at the bottom, our pulse histogram is now green. We talked about the yellow readings earlier on SPY. Now we're seeing green readings. What does that mean? It means prices between a 2 and a 3 standard deviation move on the upside. Now, only 2% of all occurrences are going to fall outside of this range on the upside. Definitely hitting a point now where markets have made a move. They're tired. We could very well see a period of consolidation or even a reversal to the downside. So just like SPY, I would be interested in selling an out of the money call spread. So let's take a look. Let's go over to the trade page. Now with the tech stocks, we've got to be cautious with any individual stock for that matter. You've got to be cautious right now because we are going to get closer to earnings season here over the next few weeks as we get into the second half of this month. We have a lot of these stocks that will be releasing their earnings. If we take a look at Microsoft, earnings out on April 27th, 20 days from now. I personally do not like to hold positions through earnings. So I'm more than willing to take a trade here on Microsoft because I'm looking for a trade in the very near term, but I'm not going to hold the position through earnings. That impacts how I select the expiration cycle. If I know the earnings are out on 4/27, okay, I want to make sure that I'm using an expiration cycle that allows me to get out before then. If I open up those April 23rd options, those expire the Friday before earnings. So I'm definitely willing to take a look at these here. Plenty of open interest, plenty of volume, very liquid product here. So I'm going to take a look. Let's go out and take a look at the 255 call. I highlight it in blue here. I'm going to right click on those, go to sell, and I'm going to select vertical. It pops up an order down at the bottom where I would be selling the 255 call and buying the 257.5 call at the same time. Right now, this is currently trading for 71 cents. Okay, if I click on confirm and send, ideally for a credit spread, I want to be risking between 2 and 3 to make 1. If I can stay inside of that range, the numbers will work in my favor over time. If I start to fall outside of that range where I'm risking 5, 6, 7 to make 1, it doesn't work. Or I shouldn't say it. It could work. It doesn't make sense over time. It's more difficult to get the numbers in your favor consistently. So if I collect $71 per spread, I'd be risking 179. So I'm risking 179 to make 71 on the trade. My target zone on this is when I can keep between 50 and 75% of the max profit. So if I can buy this thing back for between 17 and 35 cents, that would be my desired range. How would I hit that target range? I have 5 ways of making money on the position. I make money if the stock moves up, down, or sideways, as long as price stays below 255. That's the strike of the option that I'm selling. I also make money from time decay adding up and from volatility decreasing. So I've got 5 routes that I can follow to be profitable on this trade. And notice the 255 calls that I'm selling here, they have a 68% chance of closing out of the money. That's exactly what I want to have happen. So does it guarantee a successful trade? No, there's no guarantee in trading. But what I'm doing here is I'm using the proper strategy. I'm starting to stack the deck in my favor. If I can stick to this criteria over time, I know that I'm going to have wins, losses, and break evens, but the numbers are going to continue to work out in my favor going forward. I love this trade because it's more forgiving. The first solar trade that we just talked about with the long put is far more aggressive. I need a directional move lower. If I get a directional move lower here on this Microsoft trade, that's definitely a good thing. I just don't need it. Now I can make money if we just move sideways. Instead of getting that pullback that we're expecting, what if we just chop sideways and consolidate? I'm okay with that type of a trade. So long term, you want to have a mix of trade types. I have certainly been leaning heavily towards the credit spreads over the recent months, just because they have been more forgiving. If we can start to see price action open up a bit on the downside, if we start to see some back and forth movement kick in, I will shift my focus more so towards the long calls and long puts. But we haven't seen that happen as of yet. We haven't seen a whole lot of volatility here over the past few weeks. Okay, so the trades that we talked about here today on SPY and for solar, Microsoft, those are three that are on my radar for the next couple of days. We'll wait and see what happens here going into the end of the week, see if we can finally start to get some selling pressure and trigger into a couple of those trades. If you have any questions on any of those setups, feel free to type those in. More than willing to get to those. If there's any other symbols on your list that you'd like me to take a look at, more than willing to give you some feedback. I'll go ahead and type those in now as well. So let's just take a quick peek at my internals here before we go into the afternoon. I talked about these here recently. The internals are tools that I like to look at to gauge overall market environment because I can't be glued to the screens all day, every day. These are tools that I use to quickly come in and gauge what the market's doing. In the upper left-hand corner, it takes a look at the volume ratio. It just tells you how much volume there's on the upside versus the downside here on that session. Right now, with the market very mixed, there's actually more volume on the downside, but only slightly. The ratio here on the NYSE, or the New York Stock Exchange, minus 1.18 to 1. So slightly more volume on the downside than the upside. On the NASDAQ, we're at minus 1.57 to 1. So again, slightly favoring the downside, but if this were going to be a trending day to the downside, I'd want to see that number at minus 2, minus 3 to 1 at a minimum. We're just not there. Very typical of a choppy session. In the upper right-hand corner, we've got our advanced decline line. All that's doing is it's taking a look at the New York Stock Exchange and the NASDAQ, and it tells you how many stocks are trading lower on the session versus how many stocks are trading higher on the session. On the NASDAQ, this number is at minus 1190. Far more names trading lower than higher here today. Okay, pretty decent number. I want to see that number, minus 1,000 at a minimum on the downside. That indicates selling across the board. It's not just selling in one sector or, just a core group of tech stocks. Minus 1,200 indicates there's decent selling in a broad range of markets. On the New York Stock Exchange, go ahead and switch the symbol here. And this one is sitting at minus 359. Nowhere near the minus 1,000 number I just mentioned. So this one showing that we have more names moving lower than higher today, but not overwhelming. So we want to see that number at minus 1,000. Down in the lower left-hand corner, this is the NYSE tick. And it's a 15-minute chart, and it tells you how many stocks at that very moment in time, how many stocks are trading on an uptick versus a downtick. So how many stocks are moving up by a penny, how many stocks are moving down by a penny. Right now, we're sitting at minus 160. What I'm looking for here is extremes, and the extremes are identified by the plus 1,000 level on the upside and minus 1,000 on the downside. Those levels being broken indicate buy and sell programs kicking in. Ideally, I want to see clusters of those extremes. We have not had a single plus or minus 1,000 extreme here today, nor did we get one yesterday. We have only had one extreme, and it came first thing Monday morning. We had one buy program first thing Monday morning, and that's it. The last 2 days have been very muted. Okay, a lot of back and forth, a lot of choppy moves over the past couple of days. In the lower right-hand corner, this is the 5-minute chart of SPY with a couple of indicators on it, the horizontal dotted lines. Those are just a very standard pivot point indicator. The pivots can act as support and resistance intraday. And then the blue line is the volume-weighted average price. It's going to be similar to a moving average in that price action is drawn to it. Every time that here today that we tried to break away from that level, see how price action tried to break higher? We moved right back down below the VWAP. We tried to break lower. Price action came right back up to the VWAP. And now, over the past hour or so, price has just been stuck right on top of that level. So I like to use that to see, are we just chopping or do we have any type of overbought or oversold extreme intraday? What I am seeing on these internals just continue to back up a very choppy environment. So what is my takeaway from that? Well, number one, I'm going to wait till the last hour of the day to do anything, right? I don't want to place a trade now in a choppy conditions, low volume environment. I want to wait to see what we get this afternoon. It also confirms taking a more conservative approach with more credit spreads is also a smart way to go. I love to trade long calls and long puts, but I want to make sure that price action confirms. I want to make sure that we got decent movement back and forth. And right now, we're just not getting that. These are very mixed internals, very typical of a late stage move. Markets are very, very overbought. But when you start to get indicators like this, late stage of a move, volume is light, not uncommon to get those afternoon rallies. So I wouldn't be surprised if we closed higher here this afternoon. Ideally, I would love to see some selling. I hope I'm dead wrong on that. But it does kind of feel like this market does want to grind higher into the afternoon. So I think a better shot to get more of a follow through with to the downside, that type of a move, would be here on Thursday or Friday going into the weekend. All right, so I will jump back on Friday. Try to get on right around midday for our weekly recap. We'll take a look at our overnight pop trades at that point. Also take a look at some of the setups that are on our radar for next week. So if you have any questions between now and then, feel free to type those in or contact me directly. Mike@netpicks.com is the email address. Can I give my thoughts on SQ, which is Square? Yeah, let's take a look here. Just let me load up the chart here a moment. So Square, it is a product that I do like to trade. This is the 195-minute chart. This chart here did give a long setup. This long setup came right here. It initially printed for us back on March 31st. And it printed because our trend strength histogram went from red to blue, indicating bullish momentum taking over. Price action also closed above the moving averages up top. That red and blue line is the 8 EMA. The white and yellow line is the 50 EMA. So price action is confirmed on the upside. And that trade did trigger in. It triggered in back on April 1st, the very next day. Now, we have seen a nice move higher. The entry point on this trade was at 233.63. We just got up and touched 250 here today on the high. My outlook is this. If you've got a bullish position on Square, I don't mind keeping the trade on and just looking for a further continuation on the upside. If you are not long, if you're not already in a bullish trade, I don't believe now is the smart time to initiate a new trade. I think you're chasing at this point. So if you're bullish, you can stay bullish. I'd be willing to stay bullish until price action starts to break the 8 EMA, which is that blue line. Now, if you don't have any position on, you could also potentially later this week or even early next week, take a look at selling an out of the money call spread. Why? Because our pulse indicator down at the bottom has plotted yellow. The last two bars have plotted yellow, indicating an overbought extreme. It does not mean price can't head higher. It certainly could head higher here over the next few days. It just means when you start to see those yellow bars plot, price action's already made a move. We're starting to get extended. We're starting to see the first signs of an overbought condition. Ideally, what I'd like to see, I want to see the last 3 out of 5 bars on the pulse plot yellow. We've got 2 right now. So coming in tomorrow or even Friday, if we continue to see yellow bars here, this very well could set up for a credit spread opportunity later in the week. Okay, so hopefully that makes sense. Not interested in anything new on the long side here. If you're already long, perfectly fine with you staying bullish. You're at a level now, you know, if you've been in a trade the last few days, probably a smart thing to do to move the stop. Try to lock in a little bit of profit. With this market so overbought, we could see a turn in a hurry. Not saying it's going to happen. It's just, it's possible. So, you know, moving up that stop, locking in some profit as quickly as possible, probably the prudent thing to do. Okay. So hopefully it helps. And hopefully that helps in how I'm looking at SQ. But everything that I just talked about on Square holds true for just about every name on our watch list right now. I mean, there's a few exceptions, but for the most part, a lot of these tech stocks are overdone. They've already had really great moves. Okay, not saying they can't head higher, just not a great time odds-wise. I mean, you're really not stacking the deck in your favor if you're initiating new long trades now, because the last 8-9 days, I mean, we've had gains market-wide. you're chasing at this point if you're initiating new long trades. If you're going to do it, keep it small, keep the risk small, take a small position size, and try to remove that stop and reduce risk as quickly as possible. All right, yeah, not a problem. And if you're in a trade, just take a look at some key levels. We've got this swing high right here from back on March 16th. You got a swing high up around 252. That could potentially be a near-term target. Potentially look to take some risk off if you hold up until that level. If that level breaks, the next area would be up around 256. So between 252 and 256 would be an area of interest for resistance on the upside. Okay, yeah, not a problem at all. If there's any other symbols you guys would like me to take a look at, let me know. Otherwise, I am going to start wrapping up for today. Again, I'll be back on Friday. I'll try to get on around 12 noon Eastern, right around midday, for our weekly recap. Again, if you have any questions between now and then, I'd love to connect. Mike@netpicks.com is the email, or you can leave a comment here in Facebook or on YouTube. All right, so enjoy the rest of your day, everybody, and I'll talk to you all on Friday.